Good morning, ladies and gentlemen. For those of you who I don't know in person, I'm Marcia Gordon. I'm President and CEO of the Business Council of Westchester, and we are absolutely delighted to welcome you this morning for what I think is going to be an incredibly engaging discussion and information. This is one of our Business Resource Center featured webinars, and today we're going to be addressing preparing, connecting, and adapting, maximizing your business's agility and resilience. We have a very interesting panel. I'm going to introduce the moderator. If you have questions, please use the chat room or the questions and answers. The program is being recorded, and it will be on the Business Council of Westchester website at thebcw.org. It's also being streamed live on Facebook, so please feel free to share. And I want to thank the sponsors and presenters sponsored by Citrin Cooperman, Del Bello Dinellon, Weingarten Wise and Whitaker, LLP, M&T Bank, and York International Agency. It's my pleasure now to turn this over to Mackenzie Forsberg, the co-founder and COO of Genesis Realty Group. Mackenzie, take it away.
Good morning, everyone. Happy October. It is an absolute honor to be a part of this very poignant conversation this morning. And what I believe is so special about this discussion is that the resources that any business leader needs from these 4 specific industries, it transcends time, right? If your business is doing well, whether it's booming, it's a bull market, everything's great, or the times are really uncertain and, it's the apocalypse, you need the sound advice and consultation of these 4 fields of professionals to make any decision from the small to the large. So it's a real special presentation that we have for you today. Without further ado, it's an honor to welcome our featured panel. This morning we have Lola Gazzavoda, team leader at M&T Bank. We have Kevin Marbury, partner at York International Insurance Agency. We have Heather Aboda, tax partner at Citrin Cooperman, and Heidi M. Winslow from, I screw this up every time, Del Bello, Dinellon, Weingarten, Wise, and Whitaker. So we have structured the progression of today's discussion with the audience in mind. So whether you're a business owner or the leader of an organization, you're here listening today because you're interested in learning more about how your team of professionals can, 1, help you survive, right? Let's get through the right now. 2, evolve. How do you upend your business model and transition to a new one? And 3, we don't only want to survive, we want to thrive. We're looking for future growth. So how can our team of professionals help us get there? So let's get rocking and rolling with our panel. Let's start with survive. Business owners, business leaders of organizations, they are more than mired these days with government shutdowns, closures, metrics, data. How do you guys help provide guidance to your clients to just get them through the right now and survive? Let me kick it off to you, Lola.
Thanks, Mackenzie, and thank you to everyone who is on the line this morning. Thank you for joining us. So one of the major challenges facing business owners right now is really having relationships with their bankers who can help them navigate through the PPP application. And the immediate need right now, of course, is going through that forgiveness process. the relationship with your banker, and to tell you the truth, more than just a relationship, but rather a trusting relationship with your banker through these times has been one of the most important ways a business can survive. And getting the PPP funding, as you all know, and going through the forgiveness means for a lot of the folks out there the option to continue to be in business and not having to lay people off. Right now, with a PPP forgiveness, having that trusted banker to call is very important, because the list of information needed for forgiveness can actually be quite tedious, while at the same time, the SBA rules may be changing. I'll go over some very high overview information needed, but please, I want you to make sure that the information can change from bank to bank, and your bank should be able to give you specific details that pertain to your application. The first step in preparing your loan forgiveness application is really to determine if you will select the 8-week covered period or the 24-week covered period. You do not have to wait until the end of your covered period to apply for the forgiveness if you have used all your PPP funds. There are 2 applications, and again, be sure to review with your banker to see which option will be better suited for your business. Obviously, at the same time, you'll need to supply necessary documentation, and your banker should be able to give you this information as well. But among that information, you'll be able to, to provide payroll documentation information, employee count, the PPP application and its forgiveness, proof of employee health insurance contribution, employer retirement contributions, proof of business rent paid, utility bills paid, et cetera, et cetera. I highly recommend that the person who applies for the loan forgiveness be the same person who applied for the PPP loan. And please be very thorough and double check the information with your banker, because you can only apply once for this process. And obviously a lot of what I'm talking about revolves around the CARES Act. So Heather, can you please talk a little bit more about this?
Absolutely. The CARES Act has a lot of components to it that we've been able to work with our clients on. Mostly with the PPP, what we're doing right now is trying to help the clients understand what the tax impact will be for loan forgiveness, because all the expenses paid with the loan money will not be tax deductible as of right now. But like with everything with PPP, it could change 10 more times before we actually receive some final guidance. In addition, we've been working with our clients on employee retention credits and payroll tax deferrals. But the other items that we've been working on with our clients are the PPP, the CARES Act allows now for changes. They've changed the Tax Cut Job Act law provisions. So now businesses are allowed to take net operating losses for 2018, 19, and 20 and carry them back 5 years. So anyone who filed in 2018 with an NOL can now amend their return back to 2013. So we're helping our clients there. In addition, the Tax Cut Job Act had a minor drafting error in it, and it didn't allow for bonus depreciation for 15-year leasehold improvement property. So now we're helping our clients by amending those tax returns as well for 2018. So again, lowering their income tax and getting refunds now in the money in their pockets. Not related to the CARES Act, our state and local tax group is working with our business clients and our individual clients to see what the tax impact will be now that everyone is working from home. A lot of companies have people working from home in, say, New Jersey, where they never had a presence before. So what that impact will do to their tax filings going forward, they need to know. So our state and local tax group is working with them. And one of the most common questions that I get is, now that I am no longer living, fill in the blank, New York City, can I no longer be a resident there? And it really depends. And that's where our state and local tax group is really helping our clients to understand what they need to do to change their residencies and be able to not maybe move out of a higher income tax bracket. So those are some things that we're doing right now. And I think we're going to switch this over to Kevin. How are you helping your clients survive?
Sure. From a survive perspective, the first thing that when it comes to insurance, people think about is I'm paying insurance premiums, and that's a significant line item on the P&L. Many insurers have allowed policyholders to reduce their premium basis, meaning that you can reduce payrolls or you can reduce revenues temporarily in accordance with the reduction in business to reduce the premiums. So that's one. If you're a business owner or a manager of a company, you should absolutely look into doing that to give you some relief with regard to the premiums that you typically pay. The second issue is the insurance marketplace is cyclical, just like lots of other marketplaces. And even prior to COVID, the insurance marketplace was in what we refer to as a hard market. That means rates are going up, coverage is shrinking, appetite from insurance carriers is shrinking. So it's never been more important. And COVID's made that worse, by the way, because now the interest rate environment is very poor and insurers invest their premium dollars in fixed income securities. So it's never been more important for you as a business to present yourself in the best possible light to the insurance marketplace to get the best outcome, because it's a double whammy. Businesses are suffering from COVID, and now the insurance rates are going up for most businesses, particularly in real estate. It's a very hard market in real estate. Finally, with regard to COVID,
Kevin, thanks.
Finally, with regard to COVID claims, as most people know, business interruption claims are not being paid because virus doesn't constitute physical loss. That's evolving. There's many policyholders that have sued their insurance carriers for business have business interruption claims paid. But so far, all of the courts have ruled in favor of the insurers. Actually, just today, a German court ruled in favor of a restaurant, and now German insurers must pay, and France is filing suit, must pay business interruption claims. But I still expect that business interruption claims won't be paid. Finally, there are lots of GL insurers, general liability insurers, are attaching virus exclusions to their policy. So that would exclude coverage if you had a customer or a bystander say that they contracted COVID on your premises or at your business. Those claims are not going to be paid. So you have to pay very close attention to whether or not those virus exclusions are being attached to your general liability policy. Heidi.
I'm just going to point out, it's not Kevin's fault that they're charging more for real estate and that they're denying claims.
Thanks for clarifying.
Yes. Much better.
And usually, Kevin, after they call you and they find out that their losses might not be covered by insurance, they end up calling me to find out what their rights and obligations are under their existing contracts, to see, how we're going to manage this situation. How are we going to weather this storm? I've been getting a lot of those calls lately. So sometimes a contract will have specific provisions included that, provide for a mechanism to deal with this, a path forward, maybe some accommodation. But look, nobody saw COVID coming. So oftentimes upon a review of a contract, it won't be really clear that there is any kind of mechanism. And you might not be able to look to a contract and say, well, this is what my rights are and this is what my obligations are, in light of COVID, that because of COVID, I'm in this other world. That generally doesn't happen. What I have seen, however, is a real willingness of parties to really come together and work together and figure this all out. So you have a tenant that comes to a landlord and says, look, I'm so sorry, I can't pay my rent. Now the landlord obviously has an interest in trying to work with this tenant. This tenant might be a really, great source of revenue in the long term if we can weather this short-term situation. But that landlord also has bills to pay, and that landlord has to be getting in revenue. So what I've been seeing a lot is just people coming together with creative solutions, oftentimes short-term, just to deal with what we are facing at this moment. so that a party's obligations will more closely mirror that party's means for the here and now. And honestly, you know, it's in everyone's interest if we figure out a way to help everybody survive.
Agreed. This is really great insight. Before we jump to the next topic, I thought it would be great to address a really good question that we got in the Q&A. This was addressed to Kevin. Since insurance companies are excluding COVID claims and business interruption claims, is there any availability of pandemic insurance in the marketplace today?
There is. It's very limited. I'll answer it in a couple ways. Prior to COVID, there was pandemic insurance, and it's been widely, it's known in the news that Wimbledon purchased pandemic insurance and collected big. Pandemic insurance as of now is generally not available. There is some availability in the Lloyd's of London marketplace, but it's very limited. My opinion is that when the dust settles, the government may put in a pandemic risk insurance plan, much like they put in the Terrorism Risk Insurance Act after 9/11. That's speculation on my part, but yeah, most business owners are asking, and it's just very difficult to underwrite, and there's not participation from the insurance marketplace to provide the coverage. So I think it's really going to be a government-sponsored plan when this all settled.
Thanks, Kevin. Let's jump now to evolution, right? Business models that have worked for decades, they're just not relevant anymore. And as a business owner myself, it's very challenging to be that deep, to look within your organization and think, all right, let's get back to the drawing board and reinvent ourselves. How are you guys guiding your clients to that self-discovery, to reinvent yourselves? I want to kick it off to Heather here, because I hear that your firm has created a whole department for this. Very smart.
Yes, we have a great business transformation team. They work to create business strategies and enhance business operations to unlock the value across numerous platforms for customers, employees, and in the community that the business serves. They question, how are you managing your gross margin? This can be done by changing your pricing model, fulfillment automation, or maybe even some third-party outsourcing. They're looking at your sell-through ratios to see if you have enough to go to market. And they're looking at opportunities where you can cross-sell or upsell. And lastly, they're working with the performance management. The goal obviously is to keep overhead low. And then on top of that, they want to work on the real-time reporting so that business owners can make better decisions and pivot quickly when needed. So, you know, we went from a period of time where business owners were getting reports monthly. They're getting them daily now. They need real-time reporting. They need to understand where they are and be able to change as quickly as possible. Otherwise, what happened, your budgets from January are useless now. You need to work on the day-to-day operations given everything going on. And we see that that's going to happen for the future also, that this is a need that our clients are going to need. So that's how we're helping our clients transform.
I think that speaking of shifting paradigms of the relationship between customer and industry resource, Kevin, this might be a great opportunity for you to jump in here, because from my experience, the paradigm has shifted between being a real estate owner and property manager and the insurance company.
Yeah, for me, my response here is similar to survive, and the evolve for me is businesses have to make themselves attractive to insurance companies. Gone are the days where, it's not gone, but ineffective are the days where you just send an application in your loss runs and try to get the best quote. You need to pitch yourself to the insurance companies, much like you pitch yourself to a lender or like you pitch yourself to an investor. You have to show that you have the right safety programs in place, that you have a good attorney. Shameless plug to my friend Heidi Winslow, who would be a good choice to help you draft contracts so you can shift liability away from the business, that you have a worker safety program, things of that nature. You're creating a compelling case to the underwriters to say, hey, we're better than our peers. We deserve the best rates. And, when everybody thinks about insurance, they want to be protected, but they want to pay the least amount for the good coverage. And businesses have to focus on that because, that's really the evolve. It is a paradigm shift in how businesses have to approach the insurance marketplace.
Yeah, and Kevin, you did bring up a good point. Now more than ever, you need to have the right contracts and you need to have the right protections built into those contracts. So one of the primary clauses that a year ago I was never really looking at, and now I look at every day, is the force majeure provision in certain contracts. Now what this fancy term does is basically it says, look, there are certain acts that are going to be outside any party's control. Think riots, government restrictions, acts of God like tornadoes and earthquakes. And for those acts that are purely outside of a party's control, will forgive your obligations or toll the time periods for you to perform those obligations. Now, before March, there was some appearance of specific references to epidemics and pandemics in these clauses. I'll tell you that since March, I have neither drafted nor received any contract that has not had pandemics and epidemics expressly put in these contracts. Now, I'll tell you, it's not a magic bullet. Oftentimes, it will forgive performance issues, but it will not forgive payment. So it only gets you, a certain way there to where you need to be, unless you specifically negotiate otherwise, and that's really not usual. On the real estate front for Mackenzie, just as a little aside, I've seen this concept being used creatively to have some development deals move forward that I think otherwise would not have really done so in this climate. Developers obviously are a little squeamish about moving forward with, development deals that they're about to sink millions of dollars into on the pre-development side without knowing exactly what's going to happen. But I have seen some contracts move forward that use force majeure type provisions to protect the developer from, the timing obligations, when they have to make deposits, if COVID becomes an issue again for things like your availability to go before a planning board and get your approvals and those kinds of things. So those kinds of creative solutions are what's really helping businesses evolve in this climate.
And speaking of business evolution, which is the core of this topic, Lola, you and I have been speaking a lot about how the lending industry has changed. Why don't you speak a little bit more about what we've been talking about?
Sure. As expected, obviously, through COVID, the underwriting process within the banking institutions has also changed, obviously. The foundation of underwriting loans through these times is really, the bank understanding every aspect of your business. Relationship banks put a lot of emphasis on the character of the borrower, just like you do with the vendors you're working with. The business model and the ability to adjust this model in these times is where it's being challenged and is also very important. Right now, as a lot of us know, there's a lot of uncertainties, as well as, the banks see that as a risk. So being open and really building trust with your banker is very, very important. To mitigate some of the risks, banks may be looking at comparable information for the last 3 quarters in 2020 compared to 2019. And what's the excess cash available? If revenues, for example, have reduced by 15% and stressing the cash flow at an even higher reduction and see how it performs. The strength of the balance sheet is very important, and highly leveraged companies, unfortunately, may have a very hard time borrowing at this time. At the same time, as we're looking at the character of the borrower, the business, as we know, is a human enterprise. So in business banking world, which I am in, where we're lending up to about $5 or $6 million, we require personal guarantees, and we're also putting an additional emphasis on the value of that guarantee and its strength of liquid assets. All in all, we will ask the questions involving knowing.
Awesome. We had a really good question from someone in the audience, again geared toward Kevin, getting all the good questions. Understanding painting our companies in the most attractive light is of utmost importance regarding premiums. Would you offer your thoughts on the short to midterm future of the insurance marketplace? Will it continue to be a hard market, or will 2020 change the state of the market?
Well, I never thought insurance would be so interesting to the audience, but great question. My opinion, so insurance companies make their money in two ways. One is an underwriting profit. They collect more in premium than they do in losses. And the other is investment income. They're investing significant amounts of money in, usually in AAA rated bonds. And the yield on those bonds is, as we know, interest rates are at the floor right now. So they're making that up with underwriting. So as the interest rate environment changes, I do think the largest reason why the insurance marketplace is where it is because of an evolving landscape. I'll give a statistic that a CEO of an insurance company told me once a couple of months ago. Of the top 50 verdicts in the past 5 years, the median size of the top 50 verdicts in the US has doubled in 5 years. And it's the insurance marketplace that's paying those claims. All right, coupled with the fact that you have the California wildfires now in a second very bad season. You have the 2017 three hurricanes that caused the biggest hurricane damage in any year. So it's a legal environment issue. It's a catastrophic event issue. I do think the insurance marketplace does go up and down, and I do think you're going to see correction, particularly in the liability marketplace, probably starting sometime next year, but it's going to be gradual.
Really great insight. Kind of in the same vein of evolving, I want to touch upon a really hot topic, technology. Whether you're an old school firm or you're coming from Cupertino, California, technology is of utmost importance in helping every industry evolve at this time. Do any of you have any particular feedback on the topic of technology and how it's helping you help your clients evolve their business?
I can speak a little bit about that. So as we all know, a lot of us are working remotely in the banking world, at least in my world. We do not go back to the office actually until January. So that means we're put in the position, we're talking to our customers and our prospect via video conference like this, or we're doing closings actually remotely. Actually also being remotely and be able to accomplish things and closing. It's always been important, but it continues to be even more for businesses to be able to do things remotely as well, like depositing their checks remotely, being able to get payment through merchant credit cards or invoices and so on remotely. And these are services that can really make a difference in these times where a lot of things are happening remotely, and technology is so important, and really to just help the businesses evolve in these times.
I completely understand. We're going through the same thing in my real estate firm. We have a property management arm, and we've developed technological infrastructure to promote and assist even the most elderly of tenants pay their rent online, someone apply for an apartment online, virtual walkthroughs of our vacancies. So technology goes hand in hand with evolution in anyone's business, despite the industry. All right, let's get to my favorite part. We as business owners, let's be real, we're not just trying to survive out here, which we've been talking about till now. We all want to thrive. We're in this not just for the day-to-day, but because we want to look for that future growth. How do you guys help act as an advisor to take your clients' companies to the next level after a situation like this?
I can jump in first. So for me, it's really about staying ahead of the curve. I would say that the most advanced businesses are very studious and inquisitive about emerging risks and about insurance products that are available or techniques that are available to shift that risk away from the business. Um, you know, employment law is changing all the time, and there's insurance for that. There's cyber liability is not a new risk, but it's a rapidly evolving risk with ransomware. And those products are available for not significant cost. And a risk that we see again is not new, but is extremely prevalent is social engineering or spear phishing, where you have hackers that are trying to coerce a CFO to make a transfer of funds, as an example. And we're seeing our clients under attack all the time. We're seeing our clients fall victim to that. And you need to specifically make sure that that coverage is included in certain insurance policies. So that's what I mean about staying ahead of the curve, because if we're in a situation like COVID, that's a serious blow. If you had another loss in the business that could have easily and affordably been insurable, that you almost can't sustain two blows in some scenarios. So it's every year reviewing emerging and evolving risks with your insurance agent or broker, and making sure that your insurance program's tight. And you can choose whether to buy certain insurance or not buy certain insurance, but at least you know what's out there and what you got to be worried about.
Yeah, so Kevin, you're totally right. Right now, more than ever, I feel like every business needs to be protected. And look, we all have enough to deal with COVID. Having something else happen that, we don't have the protections we thought we did would be devastating. I think another huge component of having businesses thrive in this economy is really focusing on the resources that those businesses have and making the most of those resources. And I'll tell you, at least in my opinion, one of the biggest and best resources any business has is its relationships. So now is the time to really look at your existing relationships, start fostering new relationships. I know my firm, various attorneys are getting phone calls from clients, and we're trying to connect them together because we do see opportunities for some symbiosis. And look, if our clients are thriving, that's fabulous. Another thing I'll say that I've been seeing quite a bit of is just people getting creative and reimagining their revenue streams. So for instance, you might have an industrial or retail building, and maybe a few of its tenants haven't been able to survive in this economy. And you're looking at your rental income and you're thinking, it wasn't what you thought it would be back in January when you created that budget and that worksheet with Heather over here. They've been looking at their roofs and saying, how can I commoditize my roof? And I've been seeing a tremendous uptick in things like solar leasing, where you look at what you have and you look at where your revenue could come. And yeah, sure, let's put some solar panels up on our roof and generate revenue that way to help bridge the shortfall. So it's really all about looking at how your business is positioned and looking toward the future of where you could potentially take it so that you can thrive.
Heather has built her entire business on thinking for the future. So I'd like for her to take it from here with, as a CPA, you are the queen of estate planning, succession planning. Let's talk a little bit about that.
Great, thank you. One would think it's a little weird to say we're talking about growth and we're talking about, the end of your business per se. But we're talking to our clients about their long-term plans. We're looking at the succession planning and seeing, if it's a family-run business or if they're looking, there is no next generation and they need to go to market, what do they need to do? Right now is a perfect time to start thinking about transferring the business to the next generation if it's there. Dad can transfer part of his business right now to his kids and take a discount and use up his $11.58 million gift tax exclusion. The gift and estate tax exclusion has never been so high as it is right now. It's looking to sunset December 31st, 2025, and then it's going to go back down to maybe 6 million or lower, or it might sunset sooner with the election coming up. So now is the time to talk about transferring business ownership to the next generation. Now, if you don't have that next generation and you need to go to market, what do you need to do? You need to clean house. You need to take a look at what you're doing. And if it looks good, look at your current valuation and how you can get that value to be more marketable. You want to maximize your value. You put all of your time, effort into this. This business is your baby. How are you going to do this? And you can't do it alone. Our business transformation team, I cannot say enough great things about them. They can come in, they will look to see how to get your EBITDA up, get your ratios up so that you can maximize your value. They're going to look at historical cleanup of your books. They're going to look at your infrastructure, your technical infrastructure, because at the end of the day, if you have legacy programs, they need to be up to date and running and working efficiently for the correct financial reporting. So these are things that need to be looked at. Now, the business owner has to run the business. So he needs to rely, or she needs to rely on the trusted advisors, all of us, to help them understand what needs to be done to get the best value when they go to market. And that is the most important thing, that just working with your trusted advisor and team.
Agreed. And I think that the dynamic of your relationships with your team of professionals is more important now more than ever. Lola, talk to me about how your relationships are changing, probably for the better, with a lot of your clients that are coming to you more as an advisor, not as a lender.
Sure. I'll address that. I just wanted to tag to what Kevin was talking about on fraud, and then I'll talk a little bit about the relationships piece. But right now on the banking side, we're seeing more fraud than ever. And, it's definitely happening day in, day out. And the fraudsters seem to be, one step ahead. So those kind of things can be addressed, and putting certain services or products in place at the bank level that can protect you for fraud. Just wanted to make that note so everybody can have those conversations with their bankers. On the relationship side, I would like to talk a little bit more about the bank's perspective, how your business can benefit from having a relationship with your business banking relationship manager. I emphasize relationship because of how important it is for you doing business with a bank that has a culture created as being very customer centric. Your banker can be similar to how a quarterback plays in football, and don't blame me for that note there. My son plays college football, so it's embedded in me. But your banker is the one who is able to open doors for you within the bank to other departments. And a good banker should be able to give you his or her cell phone number, so you don't have to call an 800 number. A good banker should be there and meeting with you periodically to see if there's a banking need and advise on exactly what the process is, the expectations, as well as timeline for, let's say, lending that you're trying to acquire, because we all know how important external capital is when you're looking to grow. It can also mean better relationship pricing on that loan or that mortgage you're trying to get. Sometimes there can also be exception pricing offered. Again, due to the relationship you have with the bank, and basically that can save you money while also giving you peace of mind. And let me add one last thing. Having relationships with the folks on this call or other CPAs, attorneys, or insurance partners or bankers, your group of professionals who have a good reputation in Westchester goes a long way. Trust me on that one. We all know each other, and a referral from one may be looked much more favorably compared to a referral from a banker who may not have a good reputation, let's say. So I would highly suggest and say that you create a good circle of professionals around you who can help your business obviously survive, evolve, and thrive that we've been talking about.
Yeah, this is really good from everyone. And I think one of the key takeaways for anyone in the audience is that although these are uncertain times, with the right team of advisors behind you, you can turn these uncertain times into opportunity. Our real estate firm, Genesis, we were an acquisitions and a development company, and then the recession hit. And we went right to our team of professionals, consulted with everyone to figure out how do we evolve, how do we get through this, and how do we take it to the next level after all of this is said and done. We took a hard look at the organization, created an arm for third-party property management, and that created a whole revenue stream and a whole business model that we had never before considered. So we couldn't have done that without the right team of professionals. So thank you for all of that. We have some amazing questions over here in the Q&A. So let's get right to it. Lola, how negotiable are the banks on COVID language in multifamily lending?
So it's very hard to answer that question because there's a lot of variables that go into it. It all depends on what the deal looks like. There's just who the guarantors are and so on. Usually language is negotiable at the attorney level. So to tell you the truth, we don't do that at the banker level. So I'm not sure if I have an exact answer for you on that one. Sorry.
Well, we can make a connection after this, and that's what the
There you go.
is all about. My next question is for Heather. If someone gifts, they're giving an example here. If someone gifts $11 million now and the estate tax exemption goes down, do they automatically owe tax?
No, thank goodness. So the IRS ruined my Thanksgiving last year, but for the good, they came out with guidance saying that they were not going to claw back any gifts made over the 11. So if you gift $11 million and the exclusion goes back down to $5 million, you don't automatically have a $6 million estate. But instead, what happens is they're going to somehow do a ratio. So you're not going to be hurt by making gifts now, because taxable gifts, the gifts do get pulled back into your taxable estate, but you're not going to be hurt by making any gifting now. It just, we don't know what the exemption will be going forward. But again, now is the time to definitely start making plans and trying to utilize that $11 million exclusion if possible.
Absolutely. I have a question here for Kevin. What are you doing with your clients to mitigate the rising insurance costs in the real estate market as it relates to losses and recommendations?
Very, very good question. This really applies to real estate owners, mostly applies to real estate owners that have older, older inventory. So yeah, and that's a lot of New York City. You'd be surprised how much New York City and the surrounding counties was built between 1910 and 1930, walk up, joisted masonry construction. So all of the insurance companies are looking to inspect, and if they see a cracked sidewalk, or they see a broken up floor, or they see a sagging ceiling, they're going to generate recommendations. Now, it's our job as insurance brokers to review those recommendations and discuss with the owner whether or not it makes sense to fix that or not. We know that broken sidewalks and cracked sidewalks or uneven sidewalks, they have to be fixed because it's ripe for a claim. But you really need to look into whether or not the recommendations are reasonable and the investment that you have to make into the buildings is reasonable. And if you aren't going to make the investment now, perhaps presenting a plan to the insurance company of when you are going to fix it. makes it attractive, and they will acquiesce and say, okay, we understand that's going to be fixed next year. You fix these other 4 items. So there's no common formula. It just comes down to brokering a good deal between the insurance company and the policyholder.
Great. And I'm sorry to ask you all of the hard-hitting questions over here, but I have another one. How are insurance companies changing their philosophy on raising rates? Are they working with clients to control risk as partners, or do they still have the mentality of raising rates in high loss years like post-Sandy and as what we're going through now, the West Coast fires?
Yeah, I've been in the business for 19 years and I've never experienced the marketplace right now. The shift is almost as if before you could get a bunch of quotes and now you're almost begging for quotes. So the underwriters are being very selective, and it goes back to, and I'm probably repeating this again, the only way you can bend the curve is to present a very compelling case. All right, show your maintenance records, show your safety, your safety programs, show how you manage contractual risk transfer with your attorney and with your contracts. That's really, right now, you have to give the underwriter a reason to really care, to really think that, oh, this is a great business. I probably won't pay a claim on this. So I'll give the best rates that are available or give the coverages that I'm not giving right now. I'm not sure if that answers the question, because we're just in a really bizarre time right now in the insurance marketplace. I think we're going to live with it for probably another 9 to 18 months is my suspicion. So you really have to, it's a paradigm shift with regard to how you approach the insurance marketplace and making yourself attractive.
No, understood. And, that's what sets you apart from someone who works with an insurance team versus a partner with your client, an advisor. These are uncertain times even for your industry, and it's just the conversations and the dialogue that you have with your clients that really helps them navigate what to do now. And a question that I have for Heidi is, how do you help coach your clients from a legal perspective on working with their labor force and their cautions and measures being taken to bring them back into the workforce in person?
Yeah, that's on everyone's mind. To follow up on some of these other questions, responses, before I get to that question, I will point out it's important for people to realize that things are negotiable. And I think I heard Lola touch upon that and Kevin touch upon that, but sometimes the answer you get doesn't have to be the answer. My poor husband, he knows that I have that philosophy all the time. But anyway, to your question, bringing employees back. So I'm sure everyone's heard in the news that there is a certain amount of chitter chatter about legislation that would protect an employer against COVID-related claims. That legislation has not been finalized and passed, so we don't know what that's going to look like. Before we have definitive legislation, though, there are definitely things that employers can be doing right now to help protect themselves and quite frankly, protect their labor force, because no employer wants to put their labor force in jeopardy. Best thing to do is adhere to CDC guidelines as closely as possible. You might want to consider if you do need your entire labor force back. I know my office reopened, but only half of our people go in, on Monday, Wednesday, the other half on Tuesday, Thursday. Our receptionist has a plexiglass shield in front of her. Look at those CDC recommendations carefully and try to follow them as best you can. Another thing you really have to do is communicate to your employees what you are doing to make them feel more comfortable. It's much harder to ask that receptionist, I need you to come into work, period. Versus we have hand sanitizer outside. Nobody's allowed in unless they have an appointment. We're putting a plexiglass shield in front of you. There's going to be a hand sanitizer over here. If you just communicate to them everything you're doing to protect them, it's a much easier conversation to have. And the last thing I'll mention is sometimes people are going to be anxious and nervous. And sometimes that anxiety may rise to the level of a disability. And at that point, you consult with an employment lawyer, because if you are dealing with an employee disability, it's very important that you try to make reasonable workplace accommodations to make sure you are doing what you can for that employee. So that kind of consultation at that point in time becomes critical to make sure you're doing what you need to legally do to comply with your obligations.
Thanks for answering these, guys. I have one more. Is it worth waiting for more changes from Congress regarding the PPP? Lola?
Sure. So some banks out there already have the application process down as far as forgiveness and exactly what it should look like and so on. So my suggestion would be that if you've used all the PPP funds and your bank allows you to actually apply for forgiveness, to just go with that. Because to tell you the truth, I mean, none of us know exactly what changes may be coming down, and it could be great, it could be not so great. So I would suggest if you've used the funds and your bank offers the application, just go for it.
Great. I want to thank everyone for their insights today. And again, let's use our team of professionals and advisors to help take these times and turn them into opportunity. I'm going to kick it back over to Marcia now as we wrap up. Thanks, everyone. There you are.
What a fantastic job. I've listened so intently to everything that you've said, but what I really, and you gave such fabulous information, but what I really got out of this was the importance of having a great team around you and a team that's working together. And we are so proud. First of all, you're all part of our Rising Stars network, and we're so pleased to see you all doing that. And for those listening, I couldn't think of a better team than these experts and the companies that they represent. Genesis Realty Group, Mackenzie Forsberg, M&T Bank, Lola Gadzavoda, York International, Kevin Marbury, Citron Cooperman, Heather Aboda, and Heidi Winslow from DeBello, Donnell, Weingarten, Wiesen Whitaker. You're all such great experts. You're so committed. I know you're so committed to the businesses that you serve, and your organizations also form a great network of other experts that you can go to and bring your clients to. So thank you so much for sharing your expertise today. You were extraordinarily well prepared, of course. Great questions from the audience, and please feel free to share this on social media. We will have this in our Business Resource Center, and thank you for a job very, very well done. Have a great day, everyone. Stay safe, stay healthy, wear your mask.
Thank you, Marcia.
Good day. Bye.
Bye.